Good morning traders, and welcome to this Orbex Market Insights video for Thursday, May 23rd, where we'll be looking at the FX crosses focusing on Euro Sterling and Euro Australian Dollar. Now, in terms of the fundamental factors driving Euro Sterling then, the biggest issue at the moment is of course Brexit. Headlines have been filled with Brexit related news once again this week, following Theresa May's unveiling of her new Brexit plan in UK Parliament. The new plan, which will be put to a vote in just a few weeks, offers MPs the chance to vote on whether to hold a second referendum on agreeing the terms of the deal. Now, so far the response has been widely negative, and sterling has been hit hard on expectations that the Prime Minister will be defeated once again once this bill is put to a proper vote. Now, while the euro continues to be weighed down by concerns regarding the health of the eurozone economy, it has actually held up better against the US dollar recently and has been supported sporadically through investors buying back their hedges as they unwind longs in European asset markets. And this is a dynamic which for now is allowing the euro to remain well bid against sterling. So it's a similar situation with the euro against the Australian dollar then, with the euro remaining well bid. It's been a tough month, indeed a tough year for the Australian dollar, which has collapsed against the US dollar in light of the unexpected escalation in the US-China trade war. Following Trump's surprise announcement that he was lifting 10% tariffs on around 200 billion worth of Chinese goods, China has responded with its own retaliatory 25% tariffs on $60 billion worth of US goods. And although the two sides are still locked in trade talks, a deal doesn't look likely in the near term, and in fact the prospect of further tariffs and subsequent damage to the Chinese and global economy is weighing on the Australian dollar. So let's take a look now at some technical levels, and please remember that opinions shared here do not constitute investment advice, and when trading, losses can exceed profits. So kicking off with Euro Sterling then on the daily time frame, and you can see the price rallied yesterday to test the 88.40 February high, which saw a strong reaction lower as the level holds currently for resistance. Now, the moves in Euro Sterling over May, you can see, have been incredibly bullish. We've had a straight run of consecutive bullish candles, taking price from around the 85 level all the way up to mid 88s. So after such a long consecutive run of bullish candles then, we could see a retracement lower before we continue higher and break out above that 88.40 level, if indeed we are going to do so. If we drop down onto the H4 charts, you can see that although price has been continuing to trade higher recently, testing that 88.40 level, the RSI indicator has been flagging up solid bearish divergence. And you can see that along with this large bearish engulfing candle at the highs here yesterday, there is potential now for a reversal lower. So if we do trade to the downside from current levels, the level I'll be monitoring as the next key support is the 87.20s level here. And while we hold above that level, focus will be on a further run higher and a test of that 88.40 level. And only below that 87.20s level will that outlook start to change. Moving over to the euro against the Australian dollar then, and you can see it's a similar looking chart. So the key thing to note here is that we recently broke out above that 161.20 level, which had been the February and March highs in the Euro Aussie. We traded up to test the 162.67 level before retracing lower, where we retested the 161.20 level. That held as support, and we're currently trading in between those two levels. So for now, it's a similar situation as we've seen with the Euro Sterling then, where price has paused in its bullish ascent and volatility has contracted for the time being. Now, if we drop down onto the H4 charts then, you can see the severity of that move lower earlier in the week on Monday, where we tested just below that 161.21 level. However, buyers did step back in and drove price higher up. So what we're currently looking at then is potentially price putting in a lower high against that 162.67 level, which, echoing the moves that we've seen in Euro Sterling, suggests that we could see a break lower. Now again, to the downside, we're only going to be changing the current bullish bias if we break below that 161.21 level, which could pave the way for a deeper run lower. While we remain above that level, focus is on continued upside with an eventual break of 162.67, the preferred option. Okay, so these are the levels I'm looking at then in Euro Sterling and Euro Aussie over today and over the remainder of the week. Please make sure that you stay tuned into the blog each day, where we'll keep you updated on all trading developments likely to impact the market, doing our best as always to serve traders responsibly. Okay, thanks a lot for joining me today. Have a great day and good luck with your trading.